Silver just pulled back to 118, and if your heart skipped for a second, that's not fear, that's instinct. Because deep down, you already know this isn't a random dip. This is the moment people look back at and say, I was watching it, and I still didn't act. If you missed silver at 100, this moment is actually worse, because now you know what silver is capable of, and hesitation costs more when awareness is higher. Stay with me, because what's happening right now is exactly how the biggest moves in history begin, and most people talk themselves out of them at the worst possible time. Before we go any further, take 1 second, hit like, and subscribe to Silver Reset. Not because I need it, but because when this window closes, you're going to want access to calm, clear breakdowns instead of panic headlines. And trust me, the noise is about to get loud. Here's the uncomfortable truth. When silver broke 100, most people didn't buy. They waited. They wanted confirmation. They wanted a pullback. Then when silver pushed to 110, then 115, then 120, the emotion changed. It wasn't doubt anymore. It was regret. And now that price has pulled back to 118, the brain starts playing tricks. What if this is the top? What if I'm late? What if I wait just a little longer? This exact mental loop is why most investors miss life-changing moves even when they see them coming in real time. What people don't want to admit is that pullbacks during structural breakouts are not relief. They are tests. Tests of conviction, tests of understanding, and tests of whether you're reacting emotionally or thinking strategically. Silver didn't fall back to 118 because the story broke. It pulled back because leverage had to be shaken out and weak hands needed an excuse to exit. That's how markets reset before the next leg higher. And that's why this channel is called Silver Reset. Let me be very clear, and listen closely here. The biggest mistake people made at $100 was assuming they'd get another clean chance. A nice, comfortable dip where headlines were calm and confidence felt easy. That never happens in real breakouts. The market does not reward comfort. It rewards decisiveness during uncertainty. And right now, uncertainty is exactly what creates this opportunity. At 118, silver is doing something incredibly dangerous for people on the sidelines. It's giving them hope that they can wait. Hope is far more destructive than fear in markets. Fear forces action. Hope creates delay. Delay is where opportunity quietly disappears. What makes this moment even more critical is that nothing fundamental has changed. Demand has not collapsed. Physical supply has not magically appeared. Central banks did not solve the debt problem overnight. The dollar did not regain long-term credibility. All that changed is positioning, and positioning resets fast. Here's something most channels won't say out loud. When silver was at 100, it was easy to dismiss it as too far, too fast. Now that it's pulled back, it feels safer. That's the trap. Real safety in markets exists before the crowd understands the move, not after. By the time everyone feels comfortable, the risk has already shifted to the upside. Think about how this plays out psychologically. If silver snaps back above 120, the same people waiting at 118 won't feel relief. They'll feel pressure. Pressure to chase. Pressure to act fast. Pressure to buy higher than they could have, simply because hesitation felt logical in the moment. This is how FOMO is born, not at the top, but during pullbacks that don't last long enough. This is why silver reset moments matter. They separate passive observers from participants. You don't need to predict the exact bottom. You need to understand the structure. And structurally, silver is no longer behaving like a suppressed commodity. It's behaving like an asset repricing against systemic risk. Every major silver cycle looks the same in hindsight. Breakout, disbelief, pullback, acceleration, then regret. The only variable is who acts during the pullback and who waits for confirmation that never comes. Missing $100 already taught the market a lesson. Missing 118 will feel far worse because now the excuse of "I didn't know" is gone. If you're still watching right now, it means you're not asleep at the wheel. But awareness alone doesn't protect you from regret. Action does. And action doesn't mean going all in blindly. It means understanding that windows like this don't stay open long, especially when volatility compresses right after expansion. Over the next several minutes, I'm going to walk you through why this pullback exists, what usually happens next, and why waiting for a perfect entry in a market like this often guarantees you get none at all. Stay with me, because the next phase is where most people emotionally disconnect and stop thinking clearly. And remember, Silver Reset isn't here to hype you. It is here to slow the moment down so you don't make decisions you all replay in your head later asking, why didn't I act when I had the chance? What makes this phase especially dangerous is how quiet it feels compared to the breakout. When silver ripped through 100, headlines were everywhere. Social media was loud. Emotions were extreme. Now, at 118, the volume drops, the excitement fades, and people assume the moment has passed. That assumption is exactly what the market feeds on. Big moves rarely continue at full speed. They pause, breathe, and reset. That pause is not weakness, it's preparation. A lot of people think smart money buys fear and sells greed. That's only half true. Smart money also buys boredom. When price stops making headlines and starts frustrating both bulls and bears, that's when positioning quietly builds. Right now, silver is doing exactly that. It's frustrating people who sold too early and teasing people who never bought. That emotional tension is fuel. Let's talk about what actually caused this pullback, because understanding that changes everything. This wasn't a collapse in demand. This wasn't physical silver flooding the market. This was leverage getting flushed out. When prices move too fast, margin increases, liquidity tightens, and weak positions are forced to exit. That process looks scary on the chart, but structurally, it strengthens the next move. Markets cannot move higher on unstable leverage forever. They have to reset, and resets feel uncomfortable by design. Here's where FOMO really starts to work against people. At $100, hesitation felt reasonable. Silver had never been there before. There was uncertainty. At 118, hesitation feels logical too, but for a different reason. Now people say, I'll wait for confirmation. The problem is that confirmation only comes after price moves, not before. By the time confirmation feels safe, silver won't be offering 118 anymore. This is where silver reset exists as a mindset, not just a channel name. Reset means recalibrating how you think about entries. It means letting go of the idea that the market owes you a perfect setup. It doesn't. It offers windows, and those windows close quietly, not with an announcement. Another uncomfortable truth is that pullbacks like this often retrace just enough to restore confidence, then reverse sharply. When that happens, people who waited feel forced to act emotionally. They chase, they rush, they buy higher than they planned. And that emotional entry creates stress that didn't need to exist. The regret doesn't come from buying too early. It comes from knowing you understood the setup and still hesitated. Look at the broader environment. Debt levels are still rising, interest expenses are still exploding, trust in fiat systems is still eroding. None of that paused because silver pulled back $2. If anything, this pullback is happening while systemic pressure continues to build. That disconnect between price action and fundamentals is temporary, and when it resolves, it usually resolves violently. Another thing people underestimate is how fast sentiment can flip. Right now, the narrative is calm again. Analysts talk about consolidation. Commentators debate tops and bottoms. The calm doesn't last. The moment silver pushes back above 120, headlines will change instantly. The same voices calling for patience will start warning about missing the move. That switch happens fast, and once it happens, entry becomes psychological torture. This is why watching without a plan is dangerous. Watching creates emotional attachment without commitment. Commitment doesn't mean recklessness. It means deciding in advance what kind of participant you want to be. Someone who reacts to price or someone who understands structure. Structure says, this pullback is normal. Emotion says, wait. History says, waiting usually costs more. People also forget that silver is not just a trade right now, it's a signal. It's reflecting stress across currencies, bonds, and confidence itself. When silver reprices, it doesn't ask permission. It doesn't wait for consensus. It moves when imbalance becomes too large to ignore. That's why moves feel sudden, even though the causes build for years. If you missed 100, that sting stays with you. It should. Not as punishment, but as information. It tells you that your instincts were early, but your actions were late. 118 is not redemption if you repeat the same behavior. Redemption comes from recognizing the pattern and responding differently this time. Silver reset is about breaking that loop. The loop of watching, doubting, waiting, then regretting. The reset happens when you stop asking, what if I'm wrong? And start asking, what if I hesitate again? Because historically, hesitation during structural shifts has been far more expensive than early entries during volatility. As this consolidation continues, it will feel increasingly uncomfortable to do nothing and increasingly scary to act. That tension is intentional. Markets are not designed to make you comfortable. They are designed to transfer value from the uncertain to the decisive. In the next part, we're going to talk about what typically comes after resets like this, why upside moves tend to happen faster than people expect, and how the emotional window closes long before the price window does. Stay with me, because this is where most people mentally check out, and that's usually right before things accelerate. At this stage, something subtle but powerful starts happening beneath the surface. Volume compresses, volatility tightens, and price action becomes less dramatic. To the untrained eye, it looks like nothing is happening. To experienced participants, this is the calm before acceleration. Markets don't move in straight lines, they coil, and when they uncoil, they don't give polite warnings. One of the biggest misconceptions people have is believing they all feel confident when it's time to act. Confidence rarely shows up first. Discomfort does. The moment feels awkward. The news feels mixed. Opinions conflict. That's exactly where opportunity lives. If confidence were present, the move would already be overcrowded. Right now, silver is sitting in a zone where both bulls and bears feel uneasy. Bulls worry they missed the bottom. Bears worry the drop didn't go far enough. That shared discomfort creates a vacuum, and markets hate vacuums. They resolve them with movement, not patience. Another reason this pullback is so deceptive is because people anchor emotionally to round numbers. 100 felt massive, 120 feels expensive, but anchoring ignores context. In real terms, silver is repricing against decades of monetary expansion, debt accumulation, and trust erosion. Against that backdrop, debating a $2 or $3 pullback misses the larger point entirely. This is where FOMO quietly changes shape. Early FOMO is loud and obvious. Late FOMO is silent and internal. It sounds like, I'll wait just a bit longer. That internal dialogue feels rational, but it's actually fear wearing a calm mask. Fear of being wrong, fear of acting alone, fear of committing before consensus gives permission. But consensus always arrives late. By the time everyone agrees silver is in a new era, price will already reflect that agreement. And that's when people shift from planning to chasing. Chasing creates stress. Stress shortens patience. Shortened patience leads to bad exits. It all starts with hesitation during moments like this. One thing Silver Reset focuses on is understanding timing without trying to be perfect. Perfect entries are rare and usually obvious only in hindsight. What matters more is alignment. Are you aligned with the broader trend, or are you fighting it because of short-term noise? Right now, the broader trend hasn't broken. It's paused. Think back to every major asset reprice you've ever studied. Gold in the 2000s, tech stocks in the early 2010s, Bitcoin in its early adoption phases. They all shared the same pattern: explosive move, pullback that convinces people the move is over, then continuation that leaves those people behind. The regret always sounds the same. I thought I had more time. Time is the one thing markets never give evenly. They give you either too much when nothing seems urgent or too little when everything happens at once. This moment feels slow, but it won't stay that way. When silver moves again, it won't wait for comfort levels or emotional readiness. Another critical factor people underestimate is how fast physical market dynamics can shift sentiment. Paper prices can move quickly, but physical constraints change narratives overnight. Dealer shortages, delivery delays, sudden premiums, these don't trend slowly. They appear suddenly, and once they do, the psychological window slams shut. At that point, even a small price increase feels unbearable to those still waiting, not because the price is too high, but because the regret is too heavy. That's when people stop asking logical questions and start asking emotional ones like, is it too late? That question rarely appears at bottoms. It appears after hesitation. This pullback to 118 is giving the illusion of control. It feels like you're choosing to wait. In reality, the market is choosing whether it will give you another chance, and markets rarely repeat offers once enough people are watching. Silver Reset isn't about telling you what to buy or when to click a button. It's about helping you recognize moments where the cost of inaction quietly overtakes the cost of action. Right now, that balance is shifting fast. If silver pushes back above 125, this entire pullback will be reframed as obvious consolidation. People will say it was clear in hindsight. It never feels clear in real time. Real time feels confusing. That's why decisions made during confusion matter the most. As we move closer to the next phase, emotions will intensify again. Optimism will return suddenly. Fear will flip directions. Those who prepared mentally during the quiet phase will feel calm. Those who waited will feel rushed. The difference between those two states is everything. Stay with me, because in the final part, we're going to tie this moment together, talk about what missing this window really costs psychologically, and why sharing this perspective with others might matter more than you think. This isn't just about silver, it's about learning to recognize reset points before they disappear. As we reach this point, it's important to slow down and really absorb what this moment represents. Not just for silver, but for how you respond when opportunity doesn't look dramatic anymore. Most people believe they miss moves because they weren't paying attention. In reality, they missed them because they were paying attention but waited for permission to act. Permission rarely comes when it matters. This pullback to 118 is not asking you to be fearless. It's asking you to be honest with yourself. Honest about why you hesitated at 100. Honest about whether you're repeating the same pattern now under a different excuse. The excuses always change. The outcome doesn't. What hurts most later is never the volatility. It's the memory. The memory of watching, of understanding, of telling yourself you'd act next time, and then realizing next time looked exactly like this moment, just quieter. Regret doesn't shout, it lingers. There's a reason this channel is called Silver Reset. Reset doesn't mean starting over financially. It means resetting how you respond emotionally. It means choosing not to outsource your confidence to headlines, influencers, or group sentiment. It means accepting that meaningful decisions rarely feel comfortable when they matter most. Right now, silver is offering a reset not just in price, but in behavior. It's testing whether you've learned from the breakout or whether you'll wait for another confirmation that arrives too late. The market doesn't punish ignorance as harshly as it punishes hesitation after awareness. If you act thoughtfully and silver moves higher, you'll feel calm, not euphoric. If you wait and silver moves higher, you'll feel rushed, even panicked. That emotional difference shapes every decision that follows. Calm decisions compound. Panicked ones rarely do. And let's be clear, this isn't about calling a top or bottom. It's about recognizing that structural repricing doesn't offer infinite entry points. Windows narrow, then they close. When they close, they don't reopen at the same psychological price. Sooner or later, silver will make its next decisive move. When it does, this pullback will disappear from memory for most people. It will be reduced to a line on a chart, something analysts explain after the fact. But you'll remember how it felt. You'll remember whether you leaned into clarity or retreated into comfort. That's why conversations like this matter. Not to convince, but to reflect. To pause the emotional noise long enough for you to hear your own reasoning clearly. Because the loudest regret always comes from knowing you understood the situation and still did nothing. If this video helped you see this moment differently, I want you to do two things. First, drop a comment below and tell me honestly where you are mentally right now. Not your plan, not your position, just your mindset. Reading those comments helps this community realize they're not thinking through this alone. Second, share this video with someone who keeps saying, "I'll wait a little longer." Not to pressure them, but to give them perspective. Sometimes all it takes is one calm explanation to interrupt a pattern of hesitation. And if you haven't already, make sure you're subscribed to Silver Reset. Not for alerts or hype, but for clarity when moments like this show up again. Because they always do, and they always feel different in real time than they look in hindsight. The market will move when it's ready. The only question is whether you'll recognize this moment for what it was, or whether you'll recognize it later as the one you watched slip by. That choice is quieter than people expect, and it's happening right now.